You might be wondering why some Toronto real estate investors choose to put more money into buying houses that need more work before it's ready to be rented out. Well, it's all about the math. You see, when you crunch the numbers, it becomes pretty clear that these projects often offer better returns. Now, if you are new to real estate investing, we get that this isn't too clear. So in this video, I'm going to break this all down and show you why these Toronto freehold projects can be very lucrative and how Toronto real estate investors actually make these happen. If you're new here, we're all about helping you make better real estate investing decisions in Toronto. Don't forget to like and subscribe if you enjoy our content. Now let's dive in. All right, let's simplify things. When it comes to investing in Toronto properties, you've got two main choices. You can either opt for a resale home that's move-in ready for renters, or you can opt for a fixture-upper that needs some elbow grease before it's tenant ready. Now, the catch is that the mortgage lenders typically only finance the purchase itself, leaving you to foot the bill for any renovations up front, which can mean a substantial difference when you take on a project. So naturally, more money and more work doesn't sound that great for new investors. But hold up. Here is why it makes sense for experienced real estate investors, especially in today's market. Basically, in today's higher interest rate environment, borrowing money for renovations is realistically tougher. And because of this, the gap between renovated and unrenovated properties is getting wider. And what this means is that if you're able to borrow more money to take on renovations, you could actually see a bigger boost in value. Picture this, you've got two intriguing investment opportunities to choose from. First up, there's a 3-unit house that's ready to rent out at $1.4 million. And then there's another property in Toronto that's priced at $1.1 million, but does need $150,000 of renovations to bring it up to par with the first option. Yes, you will need an extra $78,000 upfront for the renovation project, but here's the thing. You'll likely make more and more quickly if you take on the project. Based on the current market values, you're looking at around a $150,000 lift in value when you tackle the project. Next, let's look at how the rental income compares. If you opt not to refinance the property, you'll enjoy better cash flows on the project because there's less borrowed money. You've put in more of your money and you've also gained a value add lift to get a similar property compared to the turnkey option, and that simply translates to better cash flows. Another alternative would be to refinance the project once it's rented out, and if you do this, the cash flows might end up looking a lot more similar to the turnkey property. However, because of the value add lift, you end up with less net capital tied in the property after the project is done, which is the big difference. And here are some other things to think about. Since you did do the renovations yourself, you might have optimized the space better, which can mean better rents. Plus, newer renovations that you manage yourself could mean fewer repairs and maintenance too, which can all potentially mean better rent yields from an investment standpoint. Basically, the main point to remember is that when you take on larger projects, your property doesn't just go up by how much you put in, but typically is worth more afterwards. And because of this, even though it does tie up more capital up front, once the project is done and refinanced, you'll have less money tied up and possibly even better cash flows too, compared to just buying a turnkey investment property. And then having more cash on hand after refinancing also makes it easier to save up for your next investment property if that's something in your plans too. So as spring comes around, more homes are being listed for sale. What this does is that it will help to stabilize the market more and also clear out the backlog of demand from those who are hanging around the sidelines from 2023. Ultimately, this will help to make prices more predictable, which is great for investors who need to make decisions based on solid numbers. Now, if you are curious about what kind of Toronto investment opportunities are on the market, no matter if you're looking for projects or turnkey homes, you've come to the right place. Our team meets weekly to find and share the best investment opportunities on the market in Toronto, so feel free to reach out to us. We're not your typical real estate sales brokerage. Instead, we focus on using numbers to make better real estate decisions in Toronto. And that can mean looking for stronger investments with positive cash flow, thinking about risk management, and looking for ways to boost returns like value-add renovations and gentrifying areas. If you do want to discuss your private real estate situation with us, just head over to this link here to set up a time to chat. You can also check out more content on our website or find us on social media. And if you haven't done so already, please like, subscribe, and share this video if you think someone else might like it too. Thanks so much for watching, and I'll see you in the next video. Bye!